Good evening everybody and welcome to the second upload of the day. That is right, this is our second video. In this one we're going to be looking at the markets and how they have been moving throughout the day, and if you guys do enjoy this sort of content as well, do tell me and I will continue to make it. I'm more than happy to do 2 videos a day, one where we talk about some theory behind what's going on and one where we have a look at what's actually happening in the market today. So if you do enjoy this video, if it goes down well, I can make both every single day for you guys, but do let me know. Again, we're going to jump in now and we're going to start off by just quickly discussing what we're seeing in the markets today. So we're going to start off with the US markets because when we look over here, we are seeing that these are all down. We're seeing each one of these fall. We're seeing the Dow being down, S&P, Nasdaq. We are seeing other assets like gold actually being down as well. Now what's very interesting is in comparison, we're seeing Europe actually being up. Again, European markets were rising today. It says that they closed marginally higher as investors assess economic challenges. So we have a quick image of a few more markets than perhaps what we had over there, but we can see a lot of these, such as the FTSE, which is of course in the UK, is closing up by a small increase, 0.18%. We are seeing the DAX, which is in Germany, close up by 0.87%, so leading the pack. We are seeing the CAC 40 in France being up by 0.19. We are seeing the FTSE, which is the MIB version, being up by 0% allegedly. Amsterdam index is up by 0.17, and we are seeing the IBEX being up as a whole by 0.26 if we look at the change percentage in this column, in opposed to the actual numbers. So we're seeing pretty good things in Europe. Again, like we have been speaking about before, whether it's in Europe, whether it's in the US markets, whilst we can look at the European markets to perhaps infer what's going to happen in Europe or vice versa, what we can see is 1 day's worth of good data is not enough. 1 week's worth of good data, or even 1 month, it's just not enough. So whilst we may be seeing the US markets being quite flat today relative to what we have seen in the past, and whilst we're seeing Europe markets rally ever so slightly, I wouldn't say it's anything to be too celebratory about, because even coming back over to Europe before we look into the US, we can see, we're just going to pick one of these at random. Let's say the DAX, for instance. Let's have a look at the chart for it if we can, and we're going to see that chart is not really that green. Again, just all we need to do is zoom out, perhaps to the 1-year chart, and you're going to be seeing, well, it's sliding all the way through the year. Anyway, coming back to the main topic for this video, and that is the US markets, let's come back and have a look at how we're doing. We're going to look at each of the major indices and have a look at what that says about the economy as of today and where we could be going in the future. We're going to be looking at both the simple and the more complex charts so we can get a bit more of a picture as to what we could be seeing move for move. Now, we're actually going to start off on the S&P. Now, to quickly get the general outline of the trend that we're seeing from the simple chart, well, you can see decline in the morning, about 10 AM starting to come back a little bit. Again, we saw that rise almost coming to break-even neutral point, but it didn't last, and coming into 12 PM/1 PM, we started to fall again. Now, post lunchtime, if you will, this has been a trend that we have seen a little bit. It's not exactly uncommon, so not really any surprise that we didn't manage to come back from that rally as of yet. And with about 40 minutes to go until the markets close at the time of filming this, I think it is probably going to be a red day. Again, it doesn't really matter even if we do finish green, because coming back to the 5-day chart, you're going to be seeing that trend is continuing down all the way, starting the week around, or at least a 5-day week if you will, starting the week around 4,050 points, coming now to 3,900. Now if we come over to look at the more technical chart, it's going to be very interesting to see if this level does continue to hold up. Again, we're trying to hold above that level of 391 on this chart. So again, if we're looking over to this chart over here, that would be 3,900 points. So we're trying to hold above that level again, see if that does hold up. We have been lower than that in the past, because if we look back to where we were post, let's say July, we were seeing that this one was starting to drop quite significantly. So I wouldn't really worry about this too much if we were to drop below it. I wouldn't even be too surprised, if you will, because if we look at what we expected, we did anticipate seeing a rally in the bear market. It shouldn't have come as a surprise to anybody. So to see this rally throughout the July period, it doesn't really surprise me. I think even if this pattern where we're starting to see an uptrend from the absolute bottom, because again, we are still coming up from that point, and now we look like we may be flattening out, I wouldn't read anything into it. 1 week's data is not enough, like I said, a month is still not enough, and even 3 months is questionable as to how much time we have had to assess this. So on the 3-month chart, it may be looking like a bottom is forming, but I would say just don't get your hopes up just yet, because we just don't know what is going to happen here. And I'm not trying to be bearish, I'm not trying to be bullish, but you guys know that in the mornings on this channel, we've been analysing the opinions of many professionals, and I do agree with many of them, that all of the policies that we've seen in the past year or two, it will not come without a cost. Now, a lot of people anticipate that cost being the crisis that we're seeing right now, with prices across the board increasing, with the economy declining, and that manifesting itself in the stock market and other markets. And I'm inclined to agree with that opinion. And again, the question is just, where does this recession end out? Anyway, that's the picture for the S&P overall. We're coming back a little bit, but I wouldn't call it strong in any means. And on this one, I would say it's definitely too soon to say that we are in a good position or that we're anywhere near the bottom. Like I've said in the previous videos, remember, in prior bear markets, we have seen rises in the dip. We have seen the crash, whilst we have seen some slight bull runs in that process. Because what people tend to forget / just don't know, and I understand it because a lot of people entered the financial markets, when we think about it, in the last 2 or 3 years, especially a lot of people who are watching this channel. Now, if you entered the financial markets in the past 2 or 3 years, and if we look out to the 5-year chart, you're probably used to crashes like what we saw in 2020. And that doesn't occur very often. In fact, that was a once in a lifetime, I would say, occurrence. And the simple reason for that is because everything shut down. So do not get fooled into thinking that just because the markets haven't plummeted 50% on one day, that we are not in a crash. Your average crash is pretty slow and steady, and I would say that is what we are seeing right now. So it can be easy to be fooled, but I don't think you guys should be, so do stay vigilant if you aren't already. Now, what we're seeing on the 6-month here is a little bit better, but similar story. We're coming back slightly from those lows. We're going to see, though, we have hit a much higher point than where we are now, and we're coming back from that point around the 34,000 mark, coming back down to the 30,000, currently sat at 31,146. So again, going to be very interesting to see if we hold that level of support around 29.8/30. I would call that about 30,000. Going to be really interesting to see if that holds up. And again, from there, we will have to see where we go. But overall, I think this one is a pretty similar story. We do expect all of these to be quite similar, but of course, a little bit different because of what they are constituent of. For instance, the S&P is going to be a more broad tracker, because it tracks simply 500 of the biggest companies, whereas the Dow only tracks the largest companies. But we can see that with the Dow tracking the largest 30, these are stocks which are being affected as well, which is very interesting because we had people, certain individuals, which believe that these stocks are still undervalued. Whereas on the other hand, we had people like Cathie Wood, who thinks that the Dow, for instance, which tracks the biggest companies, is from now on going to suffer perhaps a bit less than something like the Russell 2000. So we'll have a look at how the Russell 2000 is doing. I will just type it in quickly and we'll see if we can find it. Okay, so we can find the Russell 3000, the Russell 1000, and no sign of the Russell 2000 by the looks of it. So we'll just quickly have a look for the Russell 1000 then. And we can see on the Russell 1000, we are still seeing a dip today of about 0.31%. If we have a look over at this. And again, Cathie Wood anticipated that whilst a lot of these smaller companies have seen bigger drops in the past year or so, as is very clear on the Russell, for example, a positive consequence of this, if you will, may be the fact that these companies have less room to drop. And coming into the 3-month chart, I mean, there is some truth to that, but really, even this is following the general trend. And I do expect this one to see probably lower lows as well. Again, it's all about seeing if we can hold these key support levels in each of these markets. On this one, we're looking to hold around 2,000 points. Now, the key thing with all of these that we have looked at so far, just remember, we are not really too far away from those bottoms. Very, very close to them indeed. So it'll be interesting to see what happens next, because it isn't very uncommon that we see days where we drop by 0.5%, 0.9%, 1%, 1.5%. That is the new trend, or it has been for the past couple of weeks and months. So if that holds on, it won't be too long until we're back at these lower points. Now the Nasdaq Composite over here, we are seeing this one drop too. We're dropping now below the 12,000 point mark, and we're coming down now to a level quite similar to where we were here. Now this was the 11,264. Come back down to there and that will be interesting, as we have found a support at that level before. Again, right now we are slightly above it. Interesting to see if that one holds up. Below that we're looking to go as low as 10.7. So if you're interested in these support and resistance levels, if you're interested in the technicals over here, that's what I am looking for all of these markets. But at the moment, it is my personal view that the technicals, they're a little bit distorted. I do agree with a lot of the professionals, a lot of the analysts, that may be true. I think that what we are looking at now and what we are feeling is the impacts of the fundamental consequences and the fundamental actions which have been taken since the 2008 financial crash. We've seen continuous money piling into the market. Now, I must also say that tomorrow we have a great video coming out on Chamath. So Chamath has a great opinion on this, so do make sure to watch it. But yeah, we've seen a lot of money pumping into this, a lot of artificial stimulus of the markets since the 08 crash. And a lot of people, including Chamath, who we're going to look at tomorrow, believes that at this point now, we're at a level where asset prices need to be sorted out. And this can't be kicked down the road forever. We're already seeing quantitative tightening from the Fed, and I think this is what we should be preparing for. I do not think the worst of this has hit yet. I think we could expect worse to come. That's my personal view, and I am not a professional, I am not a financial advisor. But my view is that we could expect worse. So I don't think that's anything bad, and I may be wrong. I do hope I am wrong, but I think we have some way to fall. Again, I will be updating you guys again if you enjoy this sort of stuff. It'll be interesting to see if these key levels on most of the indices hold up. If they do, we'll have to see where we go from there. We'll have to see what the fundamental scenario looks like in a couple of weeks, because that can all change. But I think now at the moment where we stand, we're seeing inflation incredibly high, consumer confidence incredibly low, the amount of money people have to spend anyway decreasing because of inflation. We're seeing Fed policies change, with quantitative easing being turned off and quantitative tightening being turned on. So that's a complete flip on its head. And I just want to see how this actually all affects the markets. So that's my view on it for today, guys. I want to hear what you have to say on that. Again, it's been quite concise. I just wanted to make a quick rundown. If you enjoy this sort of stuff, I can make 2 a day, like I said. And we can extend this episode out to as long as 30 minutes, an hour, if you wish, and we can have a proper look in grave detail at the financial markets. But as this was a first attempt at this, I wanted to see if it went down well before putting too much time into it. So if you enjoyed it, do let me know again, do share it if you can, like it, leave a comment, and I will be back in another one if it does well. Thank you so much, and I'll see you all again tomorrow for our new episode.